Sanibonani, Dumelang, good evening, and welcome to episode 184 of the Private Property Podcast. I'm your host, Zama. It's a Monday edition of the Private Property Podcast. I hope you've had a great weekend, very rested, but also, of course, keeping as safe as possible. Well, we're back on your screens right here on the Private Property Podcast every single weekday at 7 o'clock, tackling some of your pressing property issues. And of course, we love hearing from you throughout our show. So if you have any questions or comments or anything that you want us to tackle, then do show us some love down here below. This is certainly the time where you get to ask your pressing property issues when we have an expert guest who's able to answer your questions. And I love talking about the other shows that we have across the private property social media platforms. That's, of course, the First Time Home Buyers Show with Essie Clarkson that comes to your screens every single Wednesday at 8:45. So if you're a first-time home buyer or looking at buying that first home, then that is the show that you do not want to miss out. She gets to talk to people who've walked that journey and reflect some of the mistakes that they've had, but also what they learned along the way. So do make sure that you set your alarms for 8:45 for the First-Time Home Buyers Show. Something else that we've brought onto our screens is the Farming Podcast. So if you have any agricultural ambitions, then you certainly do not want to miss out on that podcast. Mbali Nogo comes to your screens every Tuesdays and Thursdays at 8 p.m. and tackles various issues when it comes to the agricultural landscape. It doesn't matter what it is. She herself is a farmer, so she's best placed to help you on your ambitions in order for you to become that farmer if that's one of the things that you want to do. And we never leave you over the weekend. Chad brings you the Home Shoppers Show, where you get to get a snap view of some of the best estates and complexes that the country has on offer. So you certainly want to make sure that you tune into that one as it takes you through what you can expect if you go and potentially buy into that particular estate or complex. And one of the things that we love doing, and I'm sure a lot of our regular viewers will certainly know about this one, is running competitions. To kickstart 2021, we are running the Sherlock Holmes competition. If you're like myself and love Sherlock Holmes and have probably watched every single episode, then you certainly want to make sure that you participate in this one. We're giving away 5,000 Rand vouchers every single week, right here on the Private Property Podcast with myself, Zama. And all you have to do to stand a chance of walking away with that voucher is to solve the riddle. And every single Monday, we share what the riddle is across our social media platform. And this week's riddle, so it's the second week, we're going to be running this competition for the next 12 weeks. And this week's riddle is one that you certainly want to be able to crack. And if you want to crack that riddle, then do make sure that you go onto our website. We're going to put that second riddle up. And the riddle is: where the water falls and the ibis leads the way, I have 4 places to rest my head and 3 to store my wheels. That is riddle number 2 in the Sherlock Holmes competition right here on the Private Property Podcast. So do make sure that you crack that code and make sure that you send us what your suggestions are for what the answer, who the lucky winner of that 5,000 Rand voucher is. And of course, all the winners are probably going to, not even probably, all the winners of winning the grand prize that we enter as many times as you like. Well, it is the Monday edition. We're kickstarting another great episode of Property. And this one is one you do not want to miss out. So if you've never heard of this particular topic, I'm sure that you're probably sitting at home, but you're still not quite sure what this one is. Perhaps extending you the bond that you want them to extend. Then we have a solution for you, and that is an installment sale agreement. If you've never heard of what an installment sale agreement is, then this episode is for you. We'll be unpacking what it is, what it entails, why certain sellers would even sell this particular way, or a buyer would buy using an installment sale agreement, to help us better understand this and also realize realize the importance that attorneys play in an installment sale agreement, I'm joined this evening by somebody who needs no introduction. That is Sakhile Sibeko, who's a director at Sibeko Incorporated. Sakhile, good evening, and thank you so much for joining us.
Good evening, Zama. Thank you for having me once more.
It's only a pleasure, Sakhile. So for many of our viewers who probably never even heard of the term installment sale agreement, perhaps let's start at the very top, where we look at the pros and cons and what it essentially entails, or why somebody would go in that direction. Perhaps first take us through what exactly is an installment sale agreement.
Okay, so an installment sale is an agreement to buy a property with both parties, the seller and the purchaser, would agree that the seller would sell the property, the purchaser would buy the property on installments. So for lack or to make it simpler, people would normally understand it as a rent to buy agreement. Before, I think what's also important is to say why. And there's many reasons. You have people who earn well and that can actually afford to buy property cash if given a bit of time. But you'll find that maybe the banks don't want to entertain the bond applications because maybe this person is self-employed, this person doesn't have a good ITC record, and the reasons vary. But you sit within a situation where this person says, look, I can afford to buy this property and I can afford to pay it off in a period of about 36 months. Or I want to buy this property, or I want to put down a deposit whilst I fix my ITC once I get my credit score up so that I can apply for a bond. So this is where you typically then want to entertain the idea of an installment sale. How it works then would be that you obviously need a willing buyer and a willing seller. For the sellers, it's important, the type of seller you want is a person who does not depend on the proceeds of the sale to buy their next property immediately. So typically you're looking at someone who is selling their second home or an investor, but someone who's not really pressed to get those funds at that time. A buyer could also be your tenant who has been renting your property for some years and then says, I actually want to pay this property off, I want to buy it whilst I'm still living in the property. And, you're not really living in the property yourself, so you can afford to sell that property. So those are the whys. Also, another reason why you'd want to entertain an installment sale, typically when you're looking at these high-end properties where the market is a bit slow and not coming across buyers frequently. So you may want to entertain that installment sale. Also for distressed sellers. If you want to avoid your property being repossessed, proceedings have started at the bank and you just want to avoid that process, then an installment sale is something that you can want to look at.
Sakhile, one of the things that you're mentioning as you were taking us through what an installment sale agreement, and you mentioned it in passing, and I'm sure some of the viewers probably picked it up, is we know that in a typical home loan, oftentimes the term of the home loan agreement that we have with the bank is about 240 months, and sometimes, it's slightly longer. And of course, if you pay extra every month, we know that you can reduce your loan term. Typically, what would then be the term of that installment sale agreement? Because I think people are also, in as much as, for example, as a seller, you may not be pressed to get the funds now because you need to close off that particular bond or you need the funds for the next property. But let's say, for example, 10 years or even longer for whatever reason. So when you look at, I'll say, a typical installment sale agreement, what kind of loan term, what kind of term are we typically looking at that both parties would typically enter into?
Okay, so you're looking at anything between 12 to 60 months. So it's 1 to 5 years. So it's not as long as a home loan a bond, but it's a bit shorter. But remember, at the end of the term, if the parties agree, they can extend it. Although it's not ideal because you also don't want to be waiting for too long, but you're looking at that 12 to 60 months.
And perhaps, Sakhile, take us through some of the some of the terms of this agreement, because we're often more familiar with the terms of our home loan agreement with the financial institution that we would enter into the agreement with. But what are some of the key features of that installment sale agreement that viewers should be aware of before or as they start researching an installment sale agreement? Because I've seen a lot of people being interested in being able to, doesn't involve their financial institution. So then what are some of those key terms that viewers at home need to be aware of?
Okay, so the first thing you obviously need to agree on is the purchase price. And once you have the purchase price, the next thing to agree on is the period or the term of the installment sales. Like I said, it's anything between 12 and 60 months, so 1 to 5 years. You obviously need more than one installment, so you also have to agree on how you're going to break down the payment. If we're talking about someone that is self-employed, maybe a contractor, or maybe someone who does tenders, this person can afford to buy this property, but this person does not necessarily have money every month. So you may want to say, look, every 3 months, you can make a lump sum payments. Every 3 months, then you can, so on and so forth. There's been people that have agreed to say, look, I'm going to pay you on an annual basis. So this is your lump sum on an annual basis. So important, you have your purchase price, you have your period, and also the number of installments that you can agree upon. The next thing that you need to agree upon is the deposit. If you're making use of an estate agent, then they have options. They can either wait for the full term, or the commission can be paid from the initial deposits. So you also then have the initial deposit just to get the ball rolling. Once you've agreed on that, we'd obviously have to draft an agreement, and then that agreement is then also registered at the deeds office. But before you register it at the deeds office, if the seller's property is bonded, you'd also have to inform the bondholder that, look, selling on property. Typically, they will not resist. The only thing is that, obviously, if you owe, say, about 500,000, you cannot sell your property for 500,000. You have to sell it for more so that they can also see that they'll get the money somewhere. If the purchase price is more than what is currently earned at the bank, then they will give you a consent, because we require their consent. They'd have to give consent to say we agree to this arrangement, and the registration thereof at the deeds office. When you've got your record or your agreement signed, and the bank also gives you the go-ahead, you then proceed to register this agreement at the deeds office. The reason why you do this thing is for two reasons. You don't want the person that you're buying from to sell the property to someone else while you're busy paying it off. And also, you don't want them to get a further bond on the property whilst you're busy paying it off, because then it's a bit unfair.
I'm in conversation with Sakhile, the director at Sibeko Incorporated. We're looking at an alternative way to own property, and that is by use of an installment sale agreement. I want to hear from you at home. I mean, oftentimes when we look at buying a home, we typically would go to a financial institution to apply for a bond. What have been the other ways that you've explored buying a property? I know that sometimes different people may not qualify for a home loan for a variety of different reasons, and they try to explore different ways that they can own property. And I'm certainly interested to hear from you at home. What have been those ways that you've tried to access home ownership? And if you have been aware of what an installment sale agreement is, have you ever entered into one? And how was that experience? Do share your experience with us down here below. We want to hear from you. And if you have any questions for Sakhile, do share them down here below. Now, Sakhile, I think one of the big things that you highlighted earlier on in our conversation is, some of the reasons why people would opt for an installment sale agreement. And if anything, it's very beneficial, one would say, for a buyer who perhaps doesn't have the greatest financial record, or is an entrepreneur, or is a contract worker. Perhaps their credit score is not the best, or the nature of their income isn't monthly like a lot of other workers. And so they would certainly find a good reason to use this particular method of property ownership. What are some of the benefits for the seller? Because I think some people are probably thinking, okay, why would a seller opt for this way? It would take you substantially longer to essentially sell your property. So even though you may not be as pressed to have those funds, I'm sure there's some sellers who are thinking, why would I want to wait all these months before a property is sold off, instead of just working with an agent, making sure that our property is advertised, we get a buyer and we sell it, and I'm done with this transaction, instead of having to deal with this buyer for all these months until they've eventually paid off the property. So what are some of the benefits for the seller in particular?
Okay, so if we do a calculation, let's say you sell your property for $1 million today. Obviously, you'd also agree that $1 million today versus $1 million 36 months from now does not carry the same value.
Yeah.
There's inflation and all of that. So yes, one would be correct in thinking it's not going to be worth my while to wait so long and only to come out with what I could make now. So for that, what then happens is, it's like I said, remember, people know the concept of an installment sale, but some people might know it as a rent to buy option. So the seller does actually make an income while still waiting for the capital to be paid off in the form of rental income. So the person that's buying the property would then move into your, obviously there's a deposit which is paid, and then they'll take occupation. Now when they take occupation, they'd have to then start paying your monthly rental, which is excluded from the total purchase price. So it doesn't form part of the purchase price, right? So let's say you sell your property for $1 million, and then your buyer moves into the house and you agree on an occupational rent of $10,000 per month. So whilst you're waiting for the purchase price to be paid off, you will be making money off of rental. Is that in your agreements you can agree to say, look, since you'll be using the electricity rates and taxes and all that, that would be for the buyer's accounts. So the $10,000 would then come to the seller directly, and this is how people benefit. Now, if you do a calculation of all those amounts, the capital amounts plus the rental, which you would have been making all the period, then it does, in a way, give you an advantage to say, I haven't really made $1 million out of this property, I've also made rental. And one of the advantages of it is that, remember, the person who would be buying the property, it's not like a regular tenant where, they would not be taking care of the property. This is someone who wants to own the property. So if this person is in the process of buying and owning the property, they will take good care of it. Therefore, your property's value will not diminish. And also, people then ask, okay, so what then happens if the seller does not, or the purchaser starts to default? So obviously, there'll be those conditions to say, if you are in breach, they'll give you a number of days to remedy the breach. But then if you cancel the contract because of breach, then the seller gets to keep all the funds, meaning the purchaser forfeits everything that paid into that transaction, and then they also get evicted. But also protection from the seller as well, is that should they now see that, look, things are not working out as well as I planned, or as well as I hoped they would, or I'm no longer interested in this property, or life happens, you do have the opportunity or the option of selling that property, provided that you will make enough to cover your initial obligation to the seller. So you can buy the property for $1 million. 3 or 7 months later, you get an opportunity to sell it for profit. You can still make a profit and sell it for $2 million or 1.5, provided that you cover what you owe.
Sakhile, you've actually already answered one of the questions that our viewers at home had just sent through. That is Womanim Jane, who had asked, what happens when the buyer defaults? So you've outlined that the agreement would certainly have provisions for that, and there are various ways that they're able to remedy the breach in the contract. So you essentially need to make sure that all those things are stipulated. And later on, Sakhile actually wants us to look at the important role that attorneys play in this particular agreement, because we find, especially legal contracts, and think, look, this will work. Sometimes you're even able to do that with your lease agreement. But this is probably one of those agreements you don't just want to get something online and think this will work and then use it. But we'll get to that a little bit later on in our conversation. We've got a question here from one of our top fan members on Facebook, Usemi Mahlatse, first saying that we're really learning something new here. And I wonder how many sellers are willing to go through with a sales agreement like this, like the statistics of people having such agreements. And he goes on to say, one question that's busy in my head is, are you going to be able to get the house insurance, HOA, and life cover? So how would that typically work then, Sakhile, when you are buying the property with an installment sale agreement?
Okay. The house insurance, HOA, and life cover. Remember, house insurance, you should be able to get it per arrangement. I know that insurers at times, I think that's just an underwriting issue. So I'm sorry, my battery is giving me issues there. Please bear with me.
And we're going to give Sakhile a moment there to sort out his battery. Unfortunately, tech issues sometimes do get the better of us, as we, of course, are talking about an alternative way of owning property. And Sibeko, who's a director at Sibeko Incorporated. If you have any questions and comments when it comes to this different way of owning property, then do send them through. I think one of the really great things that I quite like with this one is, if you have a long-term tenant perhaps staying in your property, and you already know that perhaps this is not a property you want to hold on to, maybe you're just about ready to offload this property, start having that conversation with your current tenant. You might just find that they are quite keen to stay there, and for a variety of reasons, perhaps they may not be able to get financing from a financial institution. Then you want to start having that conversation, because that is probably the way that both of you can find an agreement and for them to be able to start their home ownership journey. One of the very crucial things when it comes to an installment sale agreement, and we're going to be talking about it briefly with Sakhile in just a little bit, is around the use of an attorney. Oftentimes we're able to go online, whether CNA or any of these shops, and you can get your lease agreement, and it's a lot of, and I've seen a lot of landlords do this. I once did it, where you kind of just get the online lease agreement and you fill it in, you give it to your tenant, and you think, or perhaps fortunately, with an installment sale agreement, you want to work with somebody who is familiar with this, so that all your loopholes are covered. Already one of the things that Sakhile had covered is around defaulting and what would happen in the event where the buyer defaults. You want to make sure that the agreement has provisions for such defaults, because you certainly do not want to find yourself in a situation where you've entered into a 5-year agreement, you're now on year 2, and the buyer is defaulting, and you hadn't made adequate provision for what happens in the event where they default. So you really do want to make sure that you work with somebody who understands an installment sale agreement, who's done one before, and where they're able to explain to you all the line items, because I think for many of us, it may probably be the first time we are selling our property this way, or if you are a buyer, maybe the first time you are buying a property that way. You very likely may not have friends and family who've bought in that particular way. So it is one of those things that I'll say is relatively new. I mean, I remember last week somebody on my Twitter page asking me about, rent to buy and how it works. And I was saying to them that, look, it's slowly picking up in South Africa. It's certainly it isn't as big in South Africa as it is, for example, in the US, where there's pretty much a system around rent to buy. I've seen a few companies offering rent to buy options here. I don't know if I can recommend any of them. And one of the big thing, really the crux of this particular option, is finding people, particularly legal professionals, but also property professionals, and who understand and have done this before and have made provision for all the potential loopholes that protect you as the seller, but also protect you as the buyer, because you also don't want to be buying a property and, as Sakhile has pointed out, perhaps 2 years in, the seller now decides, actually, I think I can make a killing with this property. I'd agreed to sell it to Zama for X amount, but now I think I can make so much more money. I'm just going to ditch this agreement and I'm just going to sell it the conventional way. So you want to make sure that the agreement has provisions for all these potential loopholes and protects both of you, because it really is not just about the seller being protected, but you as a buyer also equally have to be protected. So do share your comments and questions for us this evening as we talk about installment sale agreements and the different ways. Perhaps this is the first time you've heard about an installment sale agreement. If it has, what are you finding interesting about it? Is this something that you would consider doing? I think one of the big things about an installment sale agreement, especially from the seller side, is you almost need to not need the funds immediately, because if it's one of those instances where you immediately need the funds because you need to cover the remainder of your bond payment in order for you to qualify for your next property, or you probably need to go the conventional way in order for you to be able to afford to buy that next property. It really is for sellers who aren't in a rush to get the funds. Often, whenever I've actually seen an installment sale agreement used, a lot of the times it's, I'll say, slightly older property investors who have a few properties in their portfolio and are offloading a property or two, and they're not in a rush to get funds from that particular property, and so they have the time to enter into an installment sale with. So those have been some of the ways or reasons that I've seen, certainly in my experience, that I've seen people, seller's side that is, enter into installment sale agreements. And on the buyer side, the few that I've seen, and we've spoken briefly about it, it's typically sellers whose credit scores have not been that great. Some of them, the finances have not been the best. So you found that they found this to be a better way to home ownership. So they're able to pay rent. They're able to pay rent on time every month. But unfortunately, they're not able to access bank financing in order to buy that particular property. And so that's been one of the reasons why they've then gone on to make sure that they get they enter into agreement with the seller who is willing. So we've got our guest back with Sakhile. We've sorted out our tech issues. So we will now go straight to your questions and comments on our Facebook and YouTube page. And I see here on YouTube, we've got Emmanuel Pillay saying, could you possibly run through an example of the lease agreement option, including where there is an outstanding bond and how we as a potential investor could benefit with low risk?
Can you please repeat that?
So Emmanuel Pillay on YouTube says, could you possibly run through an example of the installment sale agreement option, including where there is an outstanding bond and how we as a potential investor could benefit with low risk?
Okay. Like I said, remember, can you hear me?
Yes, I can hear you, Sakhile.
Okay. So how it works then would be, remember we'll do the agreement, and then as I was explaining, if there's an outstanding bond, would have to send a request to the bondholder. So that would be to the bank to say, listen, it's like with any other transaction, even if it's not an installment sale. The process of transferring a property involves informing the bank that this property is now being sold and therefore we wish to cancel this bond. So the same principle applies. If there is an outstanding bond, we'd have to write to the bondholder, informing them that there is a transaction happening on this property where we're selling this property for X amount, and therefore we request your permission. Because remember that when a property is bonded, the title deed sits with the bank. So you need the bank's buy-in to say, okay, we give you consent, you can sell this or you can record this transaction. So what then happens is that we do a Section 20 endorsement, which is an endorsement against the title deed. So for us to do that, we need to get the actual title deed. And before we can get the title deed, we would have to get the bank to give us a consent. So the bank would have to give us their go-ahead, and the process of these offices then follow through, where the bank then also comes and they give that consent to say we agree to these parties entering into this contract. Obviously, to minimize risk where the bond is still outstanding, we'd always advise that, look, when we drop the agreement and when payments are made, let us rather pay off the bank, so the initial deposits or the initial installments, including those monthly rentals, let them go straight towards the bond, so that once the bond has been paid off, then you start paying the seller directly. So this is also how you minimize risk on the part of the investors.
We are taking more of your questions and comments. We've got a comment here from Okani Samda on Facebook saying, I'm wondering whether developers would entertain this, as one may want to pay the total amounts required in installments until completion than getting a bond. It's worth giving it a try. And it certainly is worth giving it a try. I think one of the things with developers that I know is that they typically tend to have a target. When we look at the different phases when they're building, they tend to have a target. So it would be interesting how many of them would perhaps put in a certain percentage for it to be installment sale agreements, as opposed to needing the almost full guarantees, because often before they're able to move to the next phase and the next phase, they need to have reached a certain target. And this is because of the financing and the way developing it typically would work. So it's very rare that you'd find all 5 phases built from the beginning. It's just not how the deal is typically structured, even from the finance side with them and their financiers. But I do think that now more than ever, a lot of the developers, it would be interesting for them, especially those who cater to a lower LSM, who may perhaps have more barriers to entry when it comes to entering the property market, if they would consider that as a method of ensuring that the potential buyers are able to own that property. Now, Sakhile, before I let you go, one of the things that we cannot overlook, and we've been talking about it, we mentioned it earlier on, is then the importance of working with an attorney, and perhaps an attorney who's done this before. When you look at installment sale agreements, this is probably one of those few agreements that you don't want to go online and download a template in order to make it work. Perhaps take us through why it's so important to work with somebody who's done this before, and the value that somebody would get when they work with an attorney who has done it before.
Fully. Look, the agreement in its nature is very technical. Yes, I know there's a lot of people that try to do it themselves. There's a lot of DIY happening, but you'll find that certain clauses are then not incorporated as they should be, and certain things are overlooked. So this is not a typical offer to purchase. It's very, and the other thing is, these agreements are often tailor-made because they stem from the initial Hi, Zama.
And I see we've got Sakhile back. We had lost him
Hello.
there for a moment, unfortunately. But Sakhile, we do have you back. You were saying that these agreements are usually tailor-made. Perhaps you can pick up from there. I do have you back now. I think Sakhile is
Yes.
just.
Sorry, as I was saying, they are very technical in nature, but they also do stem from consultation. So typically, what? Hi, can you hear me?
Yes, I can hear you. You're back with us, Sakhile.
Okay, sorry. As I was saying, a lot of these agreements, so that basically stem from the consultation. So from consulting with the clients, this is where you find out that these are the needs and this is what they want to achieve. Therefore, based on that, you then tailor make it to suit whatever agreements they've reached. So therefore, it's always important to have an attorney, and also what happens afterwards, communicating with the bank where there's a bond, and also the registration of the endorsement, because it needs to be registered at the deeds office. And this is obviously something that cannot be done by an ordinary person. You do need the specialities of a conveyancer.
Mm. And Sakhile, before I let you go this evening, what are some potential pitfalls should both the buyer and seller look out for, especially those who are now perhaps considering opting for an installment sale agreement? What are some of the things that we need to be very mindful of before we decide to go into this particular agreement?
I think what's important is just to do a thorough check on the potential buyer. There are people that's just like chance takers, but it's very important to make sure that the finances do check out. If a person says I'm making X amount, just make sure that the person indeed is making X amount. But also, it's a patience thing. If it's done properly, then at the end of the day, both parties will be smiling. But one thing that is important is that you need that surety to say this person indeed does or has the potential of making X amount. But also, people need to be well informed about these things. And also, one thing that people need to remember, it's like with the purchases, a lot of people end up defaulting and then they don't know what their remedies are. But you do also always have remedies. But it's important to also just check your contract thoroughly and make sure they understand it.
And that's a great note to leave it there, Sakhile. Thank you so much for joining us this evening.
Thank you very much for having me.
And that is Sakhile Sibeko, who's a director at Sibeko Incorporated. The big thing with this conversation is you want to make sure that you're working with a trusted team who understand installment sale agreements, because you also don't want to jump into something that you don't know or want to do it yourself. This is one of those few things that you absolutely do not want to do yourself. And also, both buyer and seller, make sure you understand the agreement. I know so many of us want to just sign. It's so much admin. I know how I typically also get frustrated when it comes to property admin and long contracts and not wanting to read every single line. Read every line, understand it. In the event where you don't understand it, ask the property practitioner or the attorney that you're working with to explain it to you. It really is their job to explain it and break it down to you. And once you are happy that you understand what you're about to sign, then you are good to go. Well, we're going to leave it there this evening here on the Private Property Podcast with myself, Zama Khumalo. We are going to keep the conversation going on our social media platform just here below, as well as on our own page at @Zamantungwa_K. We love hearing from you. And I certainly want to see how many of you this year are going to try this one out. Whether you're a seller, perhaps you might want to explore selling your property using an installment sale agreement, or you're a buyer and you've been struggling to access home ownership the conventional way. Well, this is a way that you could potentially access a new home. Do let us know in the coming weeks and months if you do opt with this particular method. We're certainly looking forward to hear from you. Well, that's it from this evening from myself and the team. We're back on your screens tomorrow evening at 7 o'clock. Remember to enter the Sherlock Holmes competition that we are running across our social media pages. You want to crack that second riddle that we have shared, and that is where the water falls and the ibis leads the way. I have 4 places to rest my head and 3 to store my wheels. Well, if you can crack that riddle, then do share what you think the answer is, and we will be unveiling the lucky winner of that 5,000 Rand cash voucher right here on the Private Property Podcast with myself, Zama Khumalo, on Friday evening. Until tomorrow, as usual, hoping you're staying home and staying safe.
Hi, I'm Nobuntu Webster. I'm an entrepreneur. I moved to Sandton to pursue a dream. I've based myself in Sandton because it's the gateway to Africa. The neighborhood of Sandton is alive. It's alive with possibility. It's got the most amazing vibe. If you need to get anything done, this is the place to get it done. One of the things I really love about Sandton is how it lights up at night. If those lights don't inspire you, nothing will. Sandton is the richest square mile in Africa. It has everything, from shopping in Sandton City to 5-star hotels like a Michelangelo for my international guests. It works for me to be here. There are so many designer stores. There's an abundance of clothes and everything else to choose from. Being an entrepreneur, I travel a lot, so it's really convenient to be able to get onto the Gau train, and in 15 minutes, I'm at the airport. Business is important to me, but my family is everything, and that's why my family and I are looking to move into one of the suburbs in Sandton. Sandton has some of the most exclusive homes in the country, in places like Hyde Park and Sandown. A little bit less fast-paced is your suburbs like Bryanston and Livonia. Bryanston was a natural choice. It's got great open spaces, it's safe. My son's already at a really good school there. Sandton gives me great variety, from an awesome nightlife to beautiful places for lunch to spas where I can really relax and recharge. Things happen in Sandton, and that's my neighborhood.